What's happening, guys? And welcome back to another Sunday Scan. We have a very great episode coming up. We have Stan who's going to join us and go through a bunch of watches. We'll cover a bunch of individual tickers, really just talk about the current market, the themes that we've been seeing, and we're going to touch on a lot of names like JOBY, QS, and a lot of others, a lot of the crypto names, SBET. So basically all the trending stocks that have been making big moves. We're going to dive deep into those and show you what we're thinking and what our plans are for the week ahead. We have a little bit different of a backdrop this week. I'm in the middle of a move, and so Stan is also in the middle of the move, so we'll joke around a little bit about that. But we have a great episode coming up for you all. Before we begin, I will give the disclaimer that none of this is financial advice, and we are not financial advisors. These are not buy or sell recommendations. All of it is for informational and educational purposes only. So we're going to get into the episode with Stan right now. And make sure that you like, subscribe, and share this with another trader to get prepared for the week ahead. All right, we're happy to have Stan back on Sunday Scan. Stan, it has been a while. What's going on?
Yes, it has been a while, Chris. Things have been great, as you know, and I know a lot of people are aware as well. I'm in the middle of a move, so have been busy with that. We're moving to Europe shortly, and it's something that has been taking a lot of my attention. However, I couldn't miss last week, right? Last week we had some really nice market action, and I was able to zone in a little bit more versus say the last month or so. But that's kind of what has been happening on a personal side, and it plays a role, right? It plays a role into how I trade. It's reflected in my trading in some fashion, because if I know that I'm unable to commit 100%, then I take that into an account. Then maybe I'll size down. Maybe I'll be more selective with what I trade. I'll be a little bit more patient around my entries. I'll be more picky with my thesis, et cetera. Like, something has to give when I can't dedicate full attention. So that has been, my life over the last, I'd say 4 to 6 weeks. But it's coming to an end, and I'd say within the next month or so, I should be in a more steady place.
Yeah, that's great. And I mean, really, what a market cycle that we've been diving into and out of. Very hot cycle right now. A lot of small caps moving, a lot of themes, and I feel like just more like the macro side, the economy's running pretty hot. They're even trying to do things to get interest rates down and all that stuff. But it's basically all systems are go. They're doing crypto stuff and everything else. And when that happens, you tend to have a ton of liquidity, and that liquidity tries to find places to go. And for the last maybe month or so, it was really anything crypto related, both in the currencies themselves, and then how that spilled over into the market with all the treasury plays, seeing BMNR, SBET, all these different names, and even other names like QS, JOBY. Even the quantum names, just really anything that's thematic, anything that a fund can really push higher, get retail excited about. They've been moving, and just incredible opportunities on the long side and on the short side. So what are you seeing kind of with those thematic plays? And then you've been long and short on them, a lot of these names.
Yeah, absolutely. So I mean, like a little bit of a wider view first, or some general comments. I think. As far as the crypto inflow that we're seeing right now into Bitcoin and Ethereum, and some of the other coins out there, to me it feels like a delayed reaction into what was maybe supposed to happen earlier on, because we have been in the most pro crypto government seating ever, and just up until recently, it really didn't do anything, right? I feel like everyone was expecting it to just go ballistic, starting end of last year, and maybe we had a little uplift in Bitcoin, but then it came back down. Ethereum never really participated. So now, to me, it feels like that's what we're seeing, is that inflow that was maybe on the sidelines, and now it's like, oh, okay, I guess it's time, and and it's in a way it's playing catch up. So I'm keeping that in mind as in terms of where and how the liquidity is being treated. But overall, completely agreed. We're in this melt up market at the moment where it feels it's primarily driven by Bitcoin and Ethereum and crypto inflows. We've seen several PRs from companies developing or committing to some sort of crypto related treasury, which is in line with every cycle, right? Which is in line with what happens with every market cycle. If I think back on the AI theme from a year or two ago, you had everyone doing AI stuff, right? You had the PRs coming about. If I think about the oil sectors, all of a sudden you had these, everyone was in oil, or with the naked shorting PRs, then everyone was interested in naked shorting. So this is totally in line with market behavior when we have this particular cycle. And we've also had some pretty good pre-market opportunities as well. I think just this last week we saw DARE, DARE, and VLCN. They all pretty much did their whole move in pre-market, and then by open or shortly thereafter gave it all up. So there's no shortage of opportunities. There is several trades that some of the trades that I took this past week. One of them was on PROK. That was an all-day fader. We've had several opportunities where it was a midday clear out. You have the steady build, and then it does its little dance for about an hour and a half, and then it retraces back. So outside of Friday, right? Outside of Friday of last week, the rest of the days, Monday through Thursday, was pretty much up and up, or some sort of a steady holding pattern.
Yeah, and then Friday we saw the big mean reversion trade happen in a lot of the crypto names, and it happened to be the monthly options expiration. So a lot of those names that might have been very call heavy, like MSTR, Coin, SBET, and a few others. That was definitely a nice time to really lock in for those mean reversion trades. And we talk about that a lot, just identifying what's pushing these things up, what are like the couple of main driving variables, and then wait for a weakness to appear in one of those, and usually that's a good time to really zone in, as opposed to just fighting these things every single day as they're holding trend, holding above VWAP. There's no capitulation yet. It's more just steady dips along a broader trend up. So really waiting for those times where it's vulnerable to a reversion, or waiting for the headline, like with some of these other names, like when they're announcing ATMs or they're announcing some kind of offerings, like that can disrupt the trend there. But really waiting for those pivotal moments to get involved for the reversion. And then as far as actually joining the trend, I mean, you were doing a good portion of that on things like QS. I was doing some of that on SBET earlier on in the week. And so just being able to play on both ways and recognize where's just the path of least resistance, where are you able to join that, and then just flip your bias when the time is right, as opposed to when you want it to be.
Right. No, I mean, absolutely, Chris. And as you touched upon QS, if you want to pull up a chart, I can just go over some of the idea and some of the process that was used throughout this week. So as you can see, the daily chart, it's getting to an overextended range, right? You have the supporting velocity increasing, you have the volume behind it, but ultimately, I have been long on this trade pretty much throughout the entire week, except on Friday, and the basis of the idea became this underlying trend, to where it just, whatever it did, and it's not perfect. I understand that it's just more so for directional reasons, but we never, in a way, broke below this trend. Every time we got close to it, here we have over the weekend, and then you have Monday morning. The moment it started, it was just higher and higher every day. So from a higher time frame, this essentially is what I used for the long thesis. And the moment we get near the trend line, and once I see confirmation, then I'm able to use that level, whether it would be 1020s on one of the days, or then it was 1140s, or even 1320s here on Thursday as well. That was a really nice long trade off the 1320s VWAP and then into the 14s push. So keeping track of the momentum, keeping track of the levels that refuse to break down is something that not only has kept me safe on the short side, or being too early, too soon, or too much too soon, but also it has allowed an opportunity to actually join the underlying trend, which makes for a much easier resolution of the overall trade idea. So that was QS, and the other trade that I had also was on PROK. I believe it was on the 15th, right over here. Let me just go back really quickly on the 1 minute chart. And the PROK trade, the PROK idea essentially was it was an all day fade idea right here on the 15th or so, and we can flash the actual chart with the executions while I'm discussing it. But the overall idea became, taking advantage of this liquidity push that they had, after the big down day. So on Monday, we had a nice, pretty much an all day fade. It opened and it never looked back. And then on Tuesday, pre-market, once we opened, we shoved higher into the previous resistance, into the previous congestion area. You can see the fives right here, the 5 level from the day before. And then once it shoved higher, was able to start in, it exhausted, it came back, and then I was able to add along the way. And overall, the idea of the all day fade is to find that underlying selling pressure. And we can see clearly on that day with PROK, there was clearly a VWAP seller once it exhausted off the morning emotion. And then you can see the VWAP seller essentially just never really let it get any higher. And then I was able to cover the majority of the position towards 3 o'clock, right around here somewhere, between 3 and 4, with adds along the way. I think I had a cover right around 10:30, and then re-added some and just left it alone for the remainder of the day. But these were some of the trades that stood out from last week. And then the other one that I wanted to mention, even though I did not trade SBET, I think it was something that we really zoned in and focused in Investors Underground overall. And I know I saw it in chat throughout the day, and it was a really, really good opportunity, because this was a trade that essentially was stocked, and it was we were prepared, and it was stocked for several days from I think the low 30s at least. And on Friday, it offered a really clean all day fade with a perfect trigger setup, right? We had this morning open, and then by 10:15 or so, it essentially shoved versus pre-market highs. You can see right here versus 40s, it never really got above that. And once it failed, it failed through VWAP. It came back, confirmed, and then it never looked back. Unfortunately, I did not have any trades on this. I'm not sure if I was even watching it versus the exhaustion. But then for me, once it fails, right? Once it fails VWAP and then it fails this structure here versus low of day, it's difficult for me to just close my eyes and enter mid decline given the move it's already had. So even though I missed it, it's something that I wanted to touch upon because it's a common trade, it's a common setup, and it's something that I know the room was prepared for to take advantage of.
Yeah, and especially on those names that have really been trending up. Like I'll throw on my chart for a moment on SBET, and you can see the similarities from what you were talking about with QS, where you just have an underlying trend in place for a long time, and really, as long as there's no major capitulation above that, or as long as there's not a failed follow through, that trend is in play. And really waiting for one of those two things, either capitulation or a big failed follow through to get involved. Unless you're scalping on the short side, but for like a larger trend change, that's really what you want to see. So you can see, the big trend lines up here, and then waiting for those times where it starts to get heavy below VWAP, around those reversion days. So you can see the trend starts to speed up here. You have, maybe some sort of capitulation, and then you kind of had a macro failed follow through here, heavy against VWAP. The options unwind. They had some kind of ATM that might have been tapped. I don't remember if it was announced early on Friday or later, but that was certainly a part of it as well. So really just waiting for a big change of character, which you can see much different here than just this, steady uptrend here, where you see these areas where it speeds up. It's not quite a capitulation. It's more of a short-term overextension within a broader trend. And so what I like to do actually is with trends, I like to define trends that are going up by more the bottom side of the trend versus the top side, unless there's something extreme. So you can see these little overextensions here, but flushes back down. And as long as the bottom part of this trend is really holding well, that's what I'm judging for the strength of that overall trend is, after those mini overextensions, it falls right back into it. And then if you compare that with, when it gets to the backside of the move, maybe you have a capitulation here, a macro failed follow through, and now you're looking for something similar where, if you were to draw a trend line kind of down here or, roughly down here, is that trend now defined by the resistance instead of the support? So trends to the upside are defined by support, and trends to the downside can be defined by resistance. So really how well it holds that, because it's a supply demand imbalance from the supply side on the way down, and it's a supply demand imbalance mostly from the demand side on the way up. So those are just a couple of things that I like to think about. And when you're joining those trends, like we had some trades, I believe it was where was it? Maybe somewhere in here, up till here, something like that. Just using those same concepts of this trend is in play, it's holding those bottom areas, just joining on flushes as long as it doesn't breach a key area, like maybe low of day or something. And then you can move up your stop, to VWAP or to other, the recent lows. And that's a good way to kind of, participate on that long side before it really gets to one of those things where it either has a capitulation, which you saw here, or a big failed follow through, which you see here. And then you kind of change the thesis, at least short term, from this trend is in play to the upside to now the trend's in play on the downside.
Mm-hmm. Yeah, absolutely. And I believe there's another one, and it's actually on the watch list. So I'll get to it, in a few minutes. But JOBY, essentially JOBY, it's similar chart, similar behavior, like SBET, like QS. Again, I'm not saying they're fundamentally related. I'm just saying from a technical standpoint, from the way the liquidity is playing out so far and the exchange of shares, structurally, it looks pretty similar. But we'll get to this one in a few minutes.
Yeah, I totally agree. And just using that same toolkit of, these trends are in play. And we had Phil Goediker on Scan a couple of weeks ago, and, he was talking about one of his favorite, setups in this market for the last, year has really been these big breakouts with volume. And if you look at these trends, look at the volume associated with them. You can see that is not just retail volume. That is, funds or other people with big money, they're able to push these up. And you can see that reflected in the volume. So not only do you have an active retail market with a lot of, the FOMO and, a lot of longs in there, but I think you also have some bigger players joining in that. And, these names, they a lot of times have options associated with them. So you'll see some bullish option flow. You'll see this crazy volume come in. You'll see those steady trends hold. And if you were like QS, if you were to envision this as, forget it's a daily chart, imagine it were just an intraday chart, you were seeing that. What are you noticing? It's really a supply demand imbalance where you have a lot of volume coming in. It's holding those prior candles. And as long as that is in play, you really need a change of character before that trend is over. So either that big capitulation or big failed follow through, and then really adjusting the bias. But as long as these things are running, there's a lot of money to be made, joining these trends before they're ready for the backside.
Mm-hmm. Yeah. And as you had identified, having the trend behind you, it makes for an easier resolution, because you're not fighting the liquidity, you're not fighting the natural desire of where this ticker wants to go, and it's something that like I said, it just makes for an easier trade.
Yeah. And then also, and not being late, like to them, like people worry so much about being late to the move or missing it, and they, get chopped up doing that. But check out a name like this, what was this? INKT. Look at how much backside this actually has once this craziness is kind of resolved. It's like, does it really matter if someone got involved right here or if they got involved right here or right here? Like, there's so much downside to it that you can wait for a clear structure and trend change, and as opposed to really trying to figure it all out on the way up. Same thing with BMNR, basically exact same situation there, where you have so much range on the upside and on the downside. You don't have to be the first one in there to really nail some of that. So and then some of the bigger ones too, like CoreWeave, we've had some major moves on the upside, and then you can just see a clear trend change where, again, the strength of that trend on the front side, it's really how well those lows are holding, and then on the back side of the move, it's really how well that resistance is holding too.
Mm-hmm. Yeah, absolutely.
So Stan, what are a couple names that you have on watch for the week, or are there any other kind of concepts you want to touch on before we get into the main watches?
I mean, I just had this CRCL here on view. So essentially, it's the same concept of that change in behavior, right? You have this several days back to back of inflow. You have that steady bid, and then you have the blowout move. It slams right down, and that shifts the behavior. And again, it's not. It doesn't mean that this is it, and these tickers are now reverting back to single digits or whatever. But what it means is, short term, there was a shock to the existing supply and demand equation. That's what it means, and it could provide, right? It could provide for the environment or increase the probability of a trend reversal. But again, all of that needs confirmation. That's why it's important to, sure, you can, even on a higher time frame, you can trade them, you can start in whatever, but to truly sink teeth in, right? Take SBET for an example, and again, this one is on watch as well. But to truly sink teeth in, you're going to have to see this underlying trend break, because until then, right? Until then, it's just very much the only thing it did is it blew out anyone that was excited, and here we are. Now we're back to following the same trend. So yeah, those are pretty much some of the last thoughts in general, and we can jump right into scan.
Great, yeah. What do you really have on watch? What's on your radar for the week, and which stocks are you tracking closely?
That's perfect. So since I have SBET on the chart here, I'll just start with that. So this one is on watch for this upcoming week. And again, really nice setup there on Friday. as you can see from a higher time frame, right? At every level, this agreed to where it just cleared out the previous couple of days highs, and then it reverted right back lower. It closed this gap or whatever. But just because it had that day on Friday, to me, it doesn't necessarily speak change of behavior or change of a trend. Sure, it perhaps had this firework. Maybe it was this warning signal, warning shot of, hey, something might be a little different now because of the change in behavior. But again, as we just, as I just mentioned a few minutes ago, this literally just pulled back right to where the underlying trend has been. And that's where it closed. That's where it held. So for me on Monday, and not just Monday, but next week, throughout the week, I'm not necessarily going to be super aggressive the moment I see a downtick or the moment I see it, flush 50, 80 cents. I'll need to see some sort of confirmation. So if we go on a little lower time frame, the ideal trade for me on Monday would be some sort of a gap, maybe 31, 32s, and then brush up against this 34, 35. So you can see how this this mid 30s level, so whatever this is, let's say 32s to 34s, you see how this $1.50 range or so, $2 range has been key over the last several sessions. You can see it firm up here. The move starts, it comes back, it holds its support again, and then it goes lower, it goes higher, I'm sorry, and then finally it cracks it here. So this mid 30s level is of importance to me, or it's of a key level, key area. And if I were to be looking for the short side, absolutely, I would like to see this maybe check in with this zone, check in with this 32 to 34s, blow through it, maybe 35, 36, and then sit back. And then once it comes back and it confirms, then I will be more comfortable into joining for potentially, a bigger change in trend. Now that, if we fail this 30s level, if we fail this 29s and it remains heavy, then there's more, a little more, perhaps I'll have more patience with the trade and let it develop, because that has been the underlying supporting trend. And then it could really speed up to the downside and, unwind some more. So that is SBET, the plan and idea for Monday and next week in general, right? I'm not going to necessarily try to nail this thing on Monday, but again, there's a particular price action, a particular behavior that I'm expecting, as I described, and that's what I'd like to see. If it gaps down, say 28s, and then it flushes, quick 27, 26s, it comes back and it puts in a higher low, then I don't mind trading this, for a bounce either. But it's not necessarily my first choice. So that's SBET. The next one I have on watch is QS. I think QS is setting up for a really good opportunity on the short side. I have been primarily long on this, and it was a decent long this day here. But for me, the chart is looking a little overextended here. It's we're getting the supported acceleration with volume. So I would like to see it, be prepared and be ready for the day that it decides to have a red day, because it hasn't had a red day in July. So again, it's not it. And just because it has a red day, it doesn't mean that that's it. The trend is done and it's over. Actually, that's unlikely, right? It's more so once trend is established, it's more likely to continue than fail. But I want to be there for that breathing room, for that chart reset, for that, profit taking, for that blowout, or whatever description you want to attach behind it. It's just how the market mechanics work. So ideally, QS, we see some sort of a gap on Monday, maybe 15.5, 16s, and then go from there. Look for the blow off move. Once it fails to follow through, that's when I really get interested. I don't want to step in front of this. I believe they have a catalyst next week. They're reporting earnings, I believe, on Wednesday. One of the days there. I can double check later. So there is a forward-looking catalyst behind this ticker, and are they gonna do the move before the earnings or the day of or after? I don't know, but I do know that the environment, the stage is setting up for an opportunity, and I want to be there to capture it. So higher the better. Ideally gap up parabolic and then fail to follow through. The next one, JOBY, again, similar, pretty much identical chart to QS, similar characteristics, similar speed up, similar acceleration. You can see on Friday we had a little bit of a weaker volume than the other days, and the price didn't really go that much higher. So that could be a little bit of a stumble. But again, I'm not, I don't really pay too much attention to that. I more so let price action dictate what's happening, not just because it had a lower volume, because a lot of things failed on Friday. Friday we saw across the board a pretty decent pullback on some names. So JOBY, similar idea to QS, gap up parabolic, and then look for a failed follow through. Again, as Chris and I discussed, we're essentially, I'm just waiting for a change in behavior, because so far there hasn't been much change in behavior. It's just higher lows. It's on its merry way. Yes, it extends, right? So you have this higher low phenomena over the trend line, and then it extends. But once a move happens, right, you can either congest by congest by price, or you can congest by time. So if you congest by price, that you're probably going to have the blow off move, and then immediately you're going to see a symmetric pullback. But if you congest by time, then you have your initial move, and then you just chop around for a couple of days, which allows your trend line to catch up with you as you meet into this corner, right? If you have something like this, you have it steady in the trend line, it deviates, it accelerates, and then it uses time to congest sideways until it meets the trend line right here again. And then, the next move happens. So really with JOBY, I will be waiting for that change in behavior. We'll be waiting for that, moment it snaps that underlying trend. So ideally gap up parabolic, and then more, fail to follow through from there. The next one that I haven't watched is BMNR. BMNR, I'm essentially just monitoring this congestion area here. It's been stuck in this whatever $10 channel for about a week. So whichever way it decides, I think if it breaks through this consolidation range and it firms up, then it could have a nice squeeze. What I do want to be mindful of is some sort of of that break being just a clear out, where it goes above this $10 range, clears out, and then it slams down. That would be a good short opportunity as well. Or if it fails this 40s, if it fails this congestion area, this price structure, then we could see a nice decent unwind. Something like this MLGO chart, or as you see how these normal moves go. So that's with BMNR. More so putting it on radar, not necessarily ready to trade it next week, but I think it might offer an opportunity. So I want to be familiar with it. And the last one that I had is this Open, OPEN. Again, same chart structure, same demand, same sort of share exchange as we've seen recently. I do like the slow build here, and now the overextension. So if on Monday, we get some sort of a gap of parabolic into the threes, I would be interested to look for a fail to follow through. But ultimately, it's more so I'm keeping it on watch because I like the increase in volume, I like the increase in speed. So I think next week it may offer an opportunity at some point. And that's all I had on watch.
Oh, great. Yeah, I share a lot of those same thoughts, especially with names like QS and JOBY. And you covered all the important elements there, so I won't touch on them again. A couple names that I have on watch. So we're still in the middle of earnings season. So we have a couple of key names like IBM next week, and that affects a lot of the quantum names because, again, when these sectors run, they're so focused on what company is mentioning quantum, what initiative or anything like that. And while we're in a hot market cycle like this, they can run these up, eventually they can do some offerings and maybe they get absorbed, but it all kind of keeps going until you usually have a big catalyst or a big narrative change. So actually, these quantum names all look like they're building fairly well into that catalyst. So I would be definitely watching the quantum names for maybe some continuation into that. And then we'll see if there's positive or negative news. You could either have an acceleration of that trend, or you could have a trend reversal there. But RGTI, IONQ, QUBT, kind of the usual suspects that have been in play and for a long time now. So I would definitely be watching those into next week. And again, if you're looking for trends to join, you're just looking for things like if they flush in the morning, and then using something like low of day if you have a bigger picture view that it could start to build and break out through here. And that really applies to most of them. So just kind of finding a period in time where you can risk against if you think the move has good continuation. A couple other names on watch, UNH, I'm watching to the downside. So this has been one where, if you remember a couple months ago, they obviously had the whole thing with their one of their executives, getting passing away a while ago. And then there was a bunch of things, regulatory things that kind of followed from that. And they were digging through and found a bunch of bad stuff. So you have this big capitulation here. And then a lot of people were able to catch this, and they've kind of been, looking for this trend change. But really what is starting to happen is that this trend after consolidating is just starting to break down again. So I think if you start to get below that 280 level, you could really have another capitulation to the downside, unless you have someone big, like I could see maybe like Buffett or someone actually stepping in if this gets cheap enough because they're in the insurance business. So if you have someone big like that step in, you could definitely have a full reversal because that's a vote of confidence. But without that, I think it's also telling if someone like that does not step in, seeing how it's his prime industry at very fair multiples and everything like that. So sometimes you can get a lot of information by inaction as opposed to just action. So until someone really big steps in, I think that this has more downside in its future. So I'd be looking for puts against key levels, just drawing those channels, and then as it's breaking through, and then retesting using that as rough levels. OKLO, we've seen the nuclear names again, kind of similar to the quantum names, where you just have these big ramp ups. You have a lot of headlines around them, and then there's been new initiatives like I think Trump announced 70 billion towards AI and different kinds of AI energy power initiatives. So these are really just trading off of a lot of those ideas. You can kind of see like a bigger cup and handle type of structure here, and maybe you have another breakout or some continuation to the upside. Because again, a dip like this that flushes out a lot of people. So if you start to have a fresh trend form again, it's not resetting from down here. You have to think about it. Okay, you have a whole new crowd after this move right here. So again, using dips or low of day or trend lines or VWAP or some kind of area as a risk level if you're long on these, and then waiting for either news catalyst or capitulation or big failed follow through before joining on the downside. And MP, you can see very similar to OKLO in my opinion, where you had those regulatory kind of headlines around it, and then you had some investment from Apple, and the Pentagon was behind some rare earth and some things like that. So very, very similar structures there. And then Tesla also has earnings next week. So that will be a big one on watch. And I feel like this almost reminds me of about, I think, a year ago when the company's fundamentals are really kind of deteriorating pretty well, but there was a narrative shift from its traditional business to more the robo-taxi business. And so even though they had a bad earnings quarter, they still gapped up on it, caught a lot of people off guard. And I almost get the feeling that we're doing that same thing where kind of everyone knows that the fundamentals, the earnings, the sales, the margins have all been kind of compressing. But if it's still kind of going up anyway, then that could be a sign that, the narrative is fully shifted towards the robotaxi thing or something else. So again, no hard bias, but I think after earnings, you could have a pretty good trend form one way or the other, and leaning towards upside as long as the market is as hot as it is. And pulling up something like ARK, this market action is very similar to 2021 when the market was running hot and you had the same types of names, in some cases the same exact names, running up. Demand coming in there, just kind of these lower quality stocks, the thematic stocks really pushing and leading in a lot of those regards. So I think that was all I have on watch. And then the only other thing is this core weave. You can see that this is a much bigger picture kind of breakdown. And this is kind of what I was talking about with UNH, but you can see on a different time frame how after this big down move here, you have some consolidation. And if it starts to break down, it can take out those lows. And then you can usually have a big, trend continuation to the downside. So those are a couple of names that I have on watch for the week. Stan, any comments on those or?
No, I mean, I think those, they're excellent, excellent ideas there. And I know we overlap on some of the, some of the other tickers as well. I think some closing comments from me would be, we are in a pretty hot market environment right now. Whether you look into some small caps as well, and also, a lot of mid to large caps, et cetera. But when we have this flow of liquidity, it parses traders' attention. It parses that liquidity along with it, which you have to be careful of, because it creates these pockets of liquidity to where you could have, some really sharp acceleration and some really sharp correction, or vice versa, some sharp decline and some sharp correction. And, you look back 10 minutes and it's like nothing happened, right? But within that time, you've oscillated around a very, very large range. I think CRCL did something similar on Friday, where it went up $30 and then it went down $50 or something like that, and that could be lethal if you're caught on the wrong side. So it's something for me to also keep in mind, in this market, as attention is parsed, as focus is not all concentrated. It could provide for these, open or these liquidity pockets where be very careful not to get caught on the wrong side of it, as it could be very painful.
Yeah, totally agree there. And especially on Friday, we had some big, just big candles up and then immediately retracing. And, sometimes that can even be a sign in my eyes of people taking advantage of those, big liquidity pockets. So if someone's in there, if they've been riding up the trend, or if they've been sitting in there, they're waiting for those big candles and then they're basically cashing out into them. So that can be a big tell. And that's how you get those big wicks, those candles with the wicks on the upside. Because it shot into that, supply zone, and it was met with supply and pushed it right back down. So that's definitely something to pay attention to. But yeah, great thoughts as always, Stan. It's good to have you back on here. I know that, we're both in the middle of moves right now in different ways, but it's been fun to catch up, and then we'll be in IU with everyone this upcoming week.
Yeah, absolutely.
All right.
Thanks for having me on again, Chris. It's been a pleasure.
All right. Take care.
Bye-bye.
Thank you, everyone, for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.